Yes, people. Today we're going to go over the two ways you only really need to enter a buy position when trading supply and demand. I'm going to break down the two variants, why they're different, and the different price action things that you need to then take entry. One of them is literally just taking a limit order straight away, but the other option is waiting for price to build a little bit more. So without further ado, let's get into it, and it's handy because the two examples are literally side by side. So first thing I need you to understand when we're trading, right, is in a bullish environment, price moves in waves, right? It creates higher highs and higher lows. You understand that it's the basic fundamentals of trading, right? And what we are looking for is entry points from these higher low positions to then continue up and make a higher high. So there's two ways that we can do this. So without further ado, I'm literally just going to get into it and explain the ways we take these entries. So the first one is the more, you have to be more patient. You have to wait for price to build, and I'm going to break down exactly how this setup was taken and how you can trade it essentially. So I'm just going to take away this risk to reward for the time being, but you see here we had this low break market structure creating a higher high. This then means we want to see a pullback for price to continue to the upside, creating a higher high. That's the logic of the market. The market does it over and over again. But we need to wait for one thing, okay? This low which created the high on this wave to the upside, you can see here we only had green candles. So on this wave to the upside, we didn't have any kind of liquidity build in terms of miniature waves to the upside. So on this wave to the downside, when we're trading supply and demand, in this case the demand candle, oftentimes this can be used as the liquidity low to fuel the move, and then price squeezes to the upside. So what we have to do is we have to wait for this price action here. We have to wait for price to tap into our main demand area, which we see we get this initial tap here. We then need a lower low to be made, sweeping liquidity, and an immediate shift in the opposite direction, breaking market structure. This price action here is known as a structure shift, and we're trading it aligning with the trend. We understand price is tapped into our demand area. When we get this structure shift, this enables us to then remove this demand candle, as this was the candle that created the market structure shift. This candle here then becomes our demand candle, and you can see here price taps into it perfectly. We would set our buy limit on the top of the demand. This low here would then become our protected low, okay, and we would simply just target a higher high. This gives us a beautiful 8.5. This is the one where you have to be patient. As I said, the key component is on this wave to the upside, we had zero liquidity built up during this wave. So we have to then wait for price to tap into the main demand. Either price sweeps liquidity or price creates a market structure shift, and then we can enter with the fresh demand candle. So that's option one. Option two is where we can enter straight away. This is during live market times, by the way. This is why I haven't shown it hitting TP yet, because price is literally building as we speak. But the exact same first principles, okay? We had a low that broke market structure, creating a higher high. But the difference between this example and this example is, you see here we have liquidity built on the way to the higher high point. This then means when price taps into our main demand area, because we have this internal liquidity, we can literally just set a buy limit at the liquidity low, and fuel will be made to push it to the upside. So our entry point is used as this liquidity low. Simple as that, guys. You have your buy limit waiting. You understand that price is wanting to move in the direction that you're trading. You're trading with the trend, but the difference is, because we have internal liquidity right here, which aligns with the main demand candle, these two components here, supply and demand and liquidity, it literally is always the perfect entry point. So I hope that makes sense. One, you can literally just set your buy limit. Your stop loss always goes at the key low, because this is your protected low. And yeah, away you go. This one we have to be more patient with in terms of price action building, just because of the liquidity area not being built. So I hope that helps. They're the two examples, and the only two that you need, to be honest. Some you can execute instantly without thinking. Others, like the first example, you have to wait for that price action to build. But the key component is always liquidity. If you have liquidity, away you go. If you don't have liquidity, you must wait for liquidity to build. So I hope that helps. I'm going to create 2 sell examples for the next video. So subscribe, like, and I'll see you in the next video. Peace and love.